There's a saying about history: there are decades when nothing happens and weeks when decades happen. And after the last 2 years, it's clear that anything can happen at any moment. As 2021 stumbles into 2022, how are the dollars and cents of your everyday life changing? Let's ask John Quelch, Dean of the University of Miami Herbert Business School, and Peter Schiff of Euro-Pacific Capital. Peter, in the 1950s, when I was just a child, life in the post-war cul-de-sac seemed more constant. The grandfatherly president on our black and white TV said, "Buy a second car, take a Sunday drive." And he built us an interstate highway system to drive it on. The future was bright. Peter, is that just our gauzy, wistful nostalgia, or have Americans' prospects for prosperity become less likely?
No, I think they have diminished dramatically, and I think it's going to get even worse as this decade progresses. You know, back then we still had a lot more economic freedom than we do now. We had a much smaller government. We were still closer to the heyday of capitalism in the latter part of the 19th century, the early 20th century. The Federal Reserve had not been around nearly as long, so it hadn't done nearly as much damage to the underlying structure of the economy. We were a huge industrial productive nation. We had big trade surpluses. We were a large creditor nation, much sounder economy. We had a lot of savings. We're the mirror image of that now. We're the world's biggest debtor nation, record trade deficits. We've got no savings. We have a complete bubble economy based on artificially low interest rates, excess consumption, financed by debt and money printing. And we're about to pay the piper for that. We're seeing now the tip of an inflationary iceberg. There's a lot more beneath the surface. Powell, despite pulling back a little bit, is still pursuing a highly accommodative monetary policy. He is throwing more gasoline on the inflationary fire that the Fed lit. So Americans, I think, are going to be dealing with a dramatically diminished standard of living as this decade unfolds. I think the dollar goes down a lot. The cost of living goes up dramatically. It's not going to be easy, unfortunately, for the U.S.
Measurably, though, I am lots better off than my parents were, and technology of all sorts has helped. Yet the popular pessimist mantra is that our grandchildren are going to be in trouble. John, will they be?
I'm certainly more optimistic than Peter. And one reason I'm optimistic is because the U.S. economy has an incredible tradition of innovation and a tremendous tradition of consumer willingness to adopt new innovation faster than consumers in other countries in the world. I also believe that the competition with China is going to be good for U.S. consumers. It's going to be good for all consumers around the world because competition is a good thing, and all of the applications of new technologies such as AI, machine learning, bio, etc., all of that is going to benefit the world and also solve some of the problems that look at the moment as if they're intractable. So I know I may be appearing to be perhaps overly enthusiastic, but the U.S. has always done a tremendous job of innovating itself out of difficulty and driving growth that can overcome many of the issues that Peter rightly flags.
Well, the world has become a smaller place, for better and for worse. When the pandemic struck, the economy was still strong. There was virtually no consumer price inflation in America. But then, as Peter said, Uncle Sam started the printing press. $1 trillion, 12 zeros in just 2 days in March. And now those relief payments and eviction moratoriums have ended. Home sale prices and rents are through the roof. There's pain at the pump, and food and commodities are more expensive. The Federal Reserve calls this inflation transitory. Peter, what do you call it?
No, it's intractable. In fact, as I said, it's just getting started. 2022 will be worse than 2021, and 2023 will be worse than 2022. No, this is going to be a highly inflationary decade. The economy was not in good shape before the pandemic. It was in a bubble. That was the problem. We really couldn't survive the economic downturn, so the Fed bailed us out with more money printing. We haven't been innovating our way out of crises. We've been printing our way out. But we've printed our way into an even bigger crisis because now we're paying the piper because this inflation acts as a lag. In fact, I think we're still dealing with the inflation that was created before the pandemic. I mean, wait till we catch up to the even greater inflation that we created after, because inflation is the expansion of the money supply. Prices going up are merely a result of inflation. Now, what happened prior to the pandemic is a lot of the inflation was manifesting itself in financial assets. So we saw real estate prices, stock prices, bond prices going up. Consumer prices didn't go up as much. Now, they went up more than the government admitted because the CPI is a highly rigged index that understates the degree to which prices are rising. I think right now prices are rising at a faster rate than at any year during the 1970s. But instead of, being on the verge of doing something to contain inflation, we're just getting ready to make it worse because we don't have the tools that we had back then, or if we have them, we can't use them because of the level of debt that we have in the economy. And, you're talking about the consumer. The real problem is the producer. You can't consume unless you produce. Our productivity is collapsing, and America is more reliant now than ever before on the productivity of foreign countries because our trade deficits are exploding. Wait until the dollar implodes, because the only thing that's been keeping a lid on inflation has been a relatively strong dollar. Well, I think the dollar is going to roll over and fall dramatically over the next several years, and that's going to cause this inflation problem to be much, much worse because it's going to really push up the price of all of our imports.
John, which is worse, inflation or deflation?
Well, I think both are terrible if they're in the extreme. I think at the margin, though, the inflation that has been spoken of here, certain proportion of that is definitely due to supply chain disruptions that have occurred during the COVID era with either manufacturing plants or ports being unable to operate at full efficiency. And we've all seen the pictures of the ships outside of LA unable to unload. So I think that perhaps around about, I would put it at about 30 to 40% of the current inflation that we're seeing is due to supply chain disruptions rather than to underlying ongoing forces. It's interesting that Chairman Powell actually used the word transitory or temporary originally to describe unacceptably low inflation in the pre-COVID period, where it was running below 2% on a consistent basis. Then, of course, he switched to use the word transitory and temporary to describe the COVID inflation that we've seen following the supply chain disruptions. I think that was a mistake. I think he elongated the use of the word transitory, stretched it, if you will, to a point where it no longer had credibility, and finally, of course, had to publicly drop the use of the word. There is definitely underlying inflation, and obviously prices and wages, as people say, go up in the elevator but come down in the stairs. And so it's very difficult once these price and wage increases are baked in to then unravel them later. So there's definitely underlying inflation that is of concern, but a big part of it is supply chain related, and that's temporary.
Unacceptably low inflation, that recently. We're speaking with John Quelch from the University of Miami and Peter Schiff, Euro Pacific Capital. And while many are just scraping by, the stock market is soaring, as is cryptocurrency. Stupid money is changing NFTs, non-fungible tokens, ownership rights to digital things accessible to anyone online. Billionaires are joyriding in space. And now the Wall Street Journal reports that wealthy people are paying hundreds hundreds of thousands of dollars to transport huge old trees, so-called trophy trees, to their estates. Reportedly, Michael Jordan lost a bidding war on an oak tree that went for over $100,000. History does not recommend a widening gulf between the haves and have-nots. John, is stuff like this tempting societal trouble?
You know, I think I'm not sure about tempting societal trouble, but let's put it this way. Social media has definitely magnified ostentatious behavior on the part of the wealthy and brought that full frontal in front of, people who are in many cases at risk because they have been either furloughed or laid off during the COVID period, or otherwise have challenges that do not enable them to participate in this flurry of wealth creation, however bubble related it may be, at the upper end of the pyramid. So when this arises, frankly, there's always social discontent, there's always social unrest. It's a reason why we see so much pressure from the liberal wing of the Democratic Party on the president to put through social reforms and new programs that will redistribute wealth. But at the same time, history teaches us that in a U.S. capitalist system, it's very difficult to actually get a grip on this kind of behavior. And as I say, the social media just magnify it.
Cryptocurrency is a real roller coaster ride. But Peter, with inflation, is cash a bad place to be now?
Well, absolutely, because inflation is a tax on cash. It's your cash being inflated away. You're losing value. But I want to just make one point about inflation, because this idea that it's the supply chain that's responsible, this is just not true. I mean, sure, when you shut down an economy, it's obvious that you're going to have less supply. You're producing less, you're working less. But what should have happened is demand should have gone down too. But unfortunately, the Fed did not allow a healthy decline in demand to meet up with the decline in supply. The Fed made the mistake of showering the economy with money, the worst monetary policy probably in history. When people were not at work and home, the Fed was printing money so the government could mail them checks so they can go out and buy stuff, even though they weren't working to help produce stuff. And so that is the problem. It is all a demand problem created by the Fed, created by money printing. And the money that the Fed is printing is going to continue to lose value, and that's going to be reflected in rising prices. So you don't want to hold cash. You want to get out of cash, but I don't think you want any U.S. financial assets at all, even stocks or real estate, because I believe that in real terms, they're going to lose a lot of value as America becomes a much poorer nation. So you want to invest internationally. You want to buy foreign assets, foreign stocks, foreign property. You want to own foreign currencies instead of the U.S. dollar. You want to own real money like gold and silver, but you don't want any of that fool's gold. Don't buy any Bitcoin or other cryptocurrencies. They're just part of the bubble that the Federal Reserve inflated, and the air is going to come out of that bubble probably faster than it comes out of a lot of the other bubbles.
Peter Schiff, John Quelch, thank you both for stepping into the big picture.